Well, folks, welcome back to Boss Economics World, where we cut through the government's economic fairy tales and expose the mess they've made of your wallets, your jobs, and your future. Today, we're diving headfirst into the latest labor market report from May 2025, and oh boy, it's a doozy. The Trump administration wants you to believe everything's peachy: jobs, growth, winning. But the data? The data tells a very different story. Buckle up, because we're about to unpack how tariffs, spending cuts, and good old-fashioned political chaos are dragging the US economy into a ditch, all while the government spins it like a top. Let's get to work. First off, let's talk about the headline numbers from the Bureau of Labor Statistics, because the Trump administration is loving these. Non-farm payrolls up by 139,000 in May 2025, hooray, jobs, they say. But hold your applause, folks, because the prior 2 months were revised down by a combined 95,000 jobs. That's right, poof, gone, like the government's credibility. So, while they're busy slapping themselves on the back for beating expectations, the reality is employers are slamming on the brakes, hoarding labor like it's the last can of beans in a zombie apocalypse. Why? Because they're terrified of Trump's economic policies, tariffs, spending cuts, you name it. And who can blame them? Let's start with the surface-level economic issue here: labor market caution. The modest job growth of 139,000 is barely keeping pace with population growth, let alone signaling a robust recovery. To put this in perspective, pre-COVID job growth under Trump's first term averaged around 200,000 jobs per month in 2019, according to BLS data. Fast forward to 2025, and we're limping along at a fraction of that pace. Worse, the downward revisions to prior months signal that the labor market's momentum is fizzling out faster than a campaign promise. But the real story isn't in the headline numbers, it's in the cracks beneath the surface. Industries exposed to Trump's tariff policies, like manufacturing, are hemorrhaging jobs. Manufacturing payrolls dropped by 8,000 in May 2025, the steepest decline this year. Meanwhile, transportation and warehousing, sectors tied to global trade, are barely treading water after 2 months of declines. And temporary help agencies? Employment there fell by the most since October 2024. These are the canaries in the coal mine, folks, warning us that Trump's trade wars are starting to bite. According to a 2025 report by the Economic Policy Institute, tariffs imposed since 2018 have already cost the U.S. economy over 300,000 jobs, with manufacturing bearing the brunt. And with Trump's latest threats to escalate tariffs on China to 60%, as reported by Bloomberg in April 2025, businesses are holding their breath, afraid to hire, invest, or expand. This isn't winning, it's paralysis. Now, let's talk about the crown jewel of Trump's economic genius: tariffs. Remember, folks, tariffs are supposed to protect American jobs and bring manufacturing back. But here's the kicker: not only are they failing to deliver, they're actively destroying jobs. Manufacturing payrolls down 8,000 in May, ouch. And don't forget, these are the same tariffs Trump paused to lift business sentiment. Pause, not end. So, businesses are still stuck in limbo, waiting for the next trade war shoe to drop. Brilliant strategy, Mr. President, really top-notch stuff. The tariff issue is a textbook example of policy uncertainty wreaking havoc on the economy. Tariffs are essentially taxes on imports, which raise costs for businesses that rely on global supply chains, think manufacturers, retailers, and even farmers. The New York Fed's 2025 research, cited in the report, found sharp and rapid negative effects on employment and capital investment due to these higher costs. And it's not just big corporations feeling the pain. Small businesses, which account for nearly 50% of U.S. employment, per the Small Business Administration, 2024, are getting crushed by higher input costs and shrinking profit margins. Take the manufacturing sector, for instance. A 2025 survey by the National Association of Manufacturers found that 78% of manufacturers reported increased costs due to tariffs, with 45% saying they've delayed hiring or expansion plans. And let's not forget the ripple effects. When manufacturers cut jobs, the transportation and warehousing sectors suffer, too, as fewer goods need to be moved. This is why we're seeing employment in these sectors either flatline or decline. The U.S. Trade Representative's Office reported in March 2025 that the cost of Trump's tariffs to American consumers and businesses has now surpassed $200 billion since 2018. That's $200 billion siphoned out of the economy, folks, money that could have been spent on hiring, innovation, or, not making everything more expensive. But wait, there's more. Not content with choking the private sector, the Trump administration is now slashing government spending like it's going out of style. Federal government jobs down 22,000 in May 2025, the biggest drop since 2020. And economists are warning that 500,000 jobs, are at risk as these cuts ripple out to contractors, universities, and anyone else who relies on public funding. But hey, who needs a functioning government when you've got fiscal responsibility, right? Here's where we dive into the deeper economic issue: austerity's drag on growth. Cutting government spending sounds great in a campaign speech, will shrink the bloated bureaucracy. But in practice, it's like trying to lose weight by cutting off your leg. Government spending, especially during periods of economic uncertainty, acts as a stabilizer, pumping money into the economy to keep demand afloat. When you slash it, you're not just cutting waste, you're cutting jobs, income, and economic activity. The federal job cuts in May 2025 are just the tip of the iceberg. As the report notes, the ripple effects could jeopardize up to 500,000 jobs in the private sector, particularly in industries like defense contracting, higher education, and healthcare, which rely heavily on federal grants and contracts. For example, a 2025 analysis by the Center on Budget and Policy Priorities found that every $1 billion in federal spending cuts leads to a loss of approximately 7,000 jobs across the economy. Do the math: a $70 billion cut, as proposed in Trump's 2025 budget, per Reuters, could wipe out nearly 500,000 jobs, just as economists are warning. Look at the labor force participation rate, which fell to a 3-month low of 62.4% in May 2025. This isn't just people choosing not to work, it's people giving up, discouraged by a labor market that's shedding opportunities faster than Trump sheds advisors. And the prime age participation rate, ages 25 to 54, is declining, too, signaling that even the core of the workforce is losing hope. Compare this to the Eurozone, where participation rates have held steady at 74%, Eurostat, 2025, thanks to targeted government stimulus. Austerity, folks, it's the gift that keeps on taking. Oh, but don't worry, folks, wages are up. Average hourly earnings rose 0.4% from April and 3.9% from a year ago. See? Everyone's getting richer. Except, hold on a second, check the inflation numbers. Core CPI is running at 4.1% year-over-year, BLS, May 2025, meaning your raise is actually a pay cut in real terms. And with Trump's tariffs jacking up the cost of everything from cars to groceries, inflation's only going to get worse. But hey, at least the stock market's happy: S&P 500 up, Treasury yields up, dollar up. Because who cares about Main Street when Wall Street's making bank? This brings us to the third economic issue: wage growth versus inflation. On the surface, a 3.9% annual wage increase sounds solid, until you factor in inflation. With core CPI at 4.1%, real wages are shrinking, eroding purchasing power for everyday Americans. And here's the kicker: Trump's tariffs are a major driver of this inflation. By raising the cost of imported goods, tariffs act like a tax on consumers, pushing up prices across the board. A 2025 study by the Peterson Institute for International Economics estimated that Trump's tariff hikes could add 0.5% to annual inflation by the end of 2025, assuming no further escalation. Meanwhile, the Federal Reserve is stuck between a rock and a hard place. With inflation heating up, they can't cut interest rates to stimulate the economy without risking a full-blown inflationary spiral. But if they raise rates to tame inflation, they'll choke off what little growth we have left, especially with businesses already spooked by tariffs and spending cuts. The Fed's hesitation, highlighted in the report, shows just how much damage policy uncertainty is doing. Consider the misery index, which combines unemployment and inflation. As of May 2025, it's at 8.3%, 4.2% unemployment plus 4.1% inflation, the highest since early 2023. Compare that to the Biden administration's final year, when it averaged 6.5%, BLS, 2024. This isn't winning, it's misery, plain and simple. So, let's recap: tariffs are killing jobs, spending cuts are killing jobs, and inflation's eating your paycheck. And what's the Trump administration doing about it? Tweeting about winning, pausing tariffs like it's a game of economic whack-a-mole, and slashing spending to own the libs. Meanwhile, the labor market's cracking, the economy's slowing, and 500,000 jobs are on the chopping block. Folks, this isn't just bad policy, it's a government-induced recession waiting to happen. And you, the American worker, are the one paying the price. Here's the core economic issue tying all this together: policy-induced uncertainty and contraction. When businesses don't know whether tariffs will skyrocket or disappear, they don't hire, they don't invest, they don't grow. When the government slashes spending, it sucks demand out of the economy, hitting everyone from federal workers to private contractors. And when inflation outpaces wages, consumers, aka the backbone of the economy, cut back, further slowing growth. This is a perfect storm, and it's entirely man-made. Look at the data. GDP growth in Q1 2025 was a measly 1.2% annualized, down from 2.1% in Q4 2024, BEA, 2025. The Conference Board's leading economic index, a predictor of future activity, has been declining for 3 straight months as of May 2025. And consumer confidence? The University of Michigan's Consumer Sentiment Index fell to 88.5 in May 2025, its lowest since late 2023. These are the warning signs of a recession, folks, and they're flashing red. A 2025 study by Moody's Analytics modeled the combined impact of Trump's tariffs and spending cuts, projecting a potential GDP contraction of 0.8% by mid-2026 if policies remain unchanged. That's not just a slowdown, that's negative growth, aka a recession. And with the Fed's hands tied, there's no cavalry coming to save the day. So, who's to blame for this mess? Spoiler alert, it's not globalists, it's not China, and it's not even the Fed, though they're not helping. No, folks, the buck stops with the Trump administration and their reckless, chaotic, and downright disastrous economic policies. Tariffs that hurt more than they help, spending cuts that gut the economy, and a complete failure to address the real issues facing American workers. This isn't America first, it's America last. And if we don't change course soon, we're all going to pay the price. Alright, folks, that's it for today's episode of Boss Economics World. If you're as fed up as I am, hit that like button, share this video, and leave a comment telling us how Trump's policies are hitting you where it hurts, your wallet. And to the professionals out there, economists, financial advisors, policymakers, stop sugarcoating this disaster and start calling it what it is, a government-made economic crisis. Until next time, stay sharp, stay skeptical, and remember, the only thing growing faster than inflation is the government's incompetence. See you next week.